So here's the thing about the stock market in 2026. A 100-year-old company that makes bulldozers and excavators, up 86% in 6 months. Because AI needs data centers, and data centers need foundations dug. I'm serious. That's the story I want to tell you today, along with one more name that I think completes the picture. Let me set the scene. Tuesday marked the last day of the first half of 2026. The S&P closed at 7,499, 64 cents from 7,500. The semiconductor index returned 101% in 6 months. Storage chips gained 318%. But here's what's wild. It wasn't just chips. The Russell 2000 small-cap stocks just had their best first half since 1991. 21%. This rally isn't narrow anymore. It's everywhere. If you're new here, subscribe. I tell one story per video, and this one's got drama. First name, Caterpillar, ticker CAT. Closed Tuesday at 1,064.90, up 3% on a green day. H1 return, 86%. This is a company that sells construction equipment, bulldozers, excavators, mining trucks, and it just became one of the hottest stocks in the S&P. Why? Because the market woke up and realized something simple. AI doesn't run on air. It runs on data centers. And every data center needs a hole in the ground, concrete, cooling systems, backup generators. CAT's equipment builds all of it. A 100-year-old industrial just got re-rated as an AI infrastructure play. Wall Street does this sometimes. It's fascinating when it happens, and terrifying when it goes too far. Now here's where it gets good. Michael Burry, the guy who predicted 2008, the guy from The Big Short, just revealed he's shorting CAT at 1,060.98. He wrote in his latest Substack, "The semiconductor index is more extended today than it was during the dot-com bubble peak. The PS ratio on CAT is at a 30-year high." His words, and I'm quoting, "I view this as the beginning of the end. A crash is only a matter of time." Strong words from a guy with a legendary track record. But here's what the daily chart actually shows. Long-term trend at 838, mid-term at 894, short-term at 979. All three rising in a clean channel that held for months. Every time CAT touched the upper rail on the daily, it bounced back. Every time it touched the lower, it caught a bid. Textbook, until Tuesday. Price punched through the upper rail at 1,037, closed above it on volume of 3.29 million shares, well above average. In technical terms, this isn't just a breakout, it's a channel exit. The rules have changed. Hourly confirms the extension. Upper rail at 1,015, price at 1,064, $49 above the rail. That's a stock running hot. The short-term trend on the hourly sits at 1,033. That's your level. If CAT finally takes a breath, and everything takes a breath eventually, you want to see how it behaves around 1,033. Respects it? That old ceiling might become the new floor, breaks through it. Burry might be collecting his first win. Either way, do not short into this right now. Do not chase it either. Wait for the tell. Which brings me to the second name, AMD, closed at 580.91, up nearly 8% Tuesday. Wells Fargo raised their target from 505 to 615, 14% upside, even after a 140% run year to date. This is not a catch-up call. This is a "this thing still has room" call. AMD's story is different from CAT's, but they're both being re-rated by the same force. AMD's next-gen server chips, EPYC Venice, built on 2-nanometer tech, entered production in May. Shipments start in the second half. The sell side sees server CPU revenue hitting $160 billion in 2026, up 68%. That's not AI hype. That's server replacement cycles and data center expansion, the actual plumbing of the internet. Daily chart tells you how far this has come. Long-term trend at 342, mid-term 493, short-term 543. All three are way below the current price. But here's the headline visual. The upper rail on the daily is still sitting at 252. 252. That channel was relevant when AMD was basing around 200 back in January. It hasn't been relevant for half a year. This isn't a stock that broke out of its channel. It's a stock that destroyed its old framework and built a new one. That's not a breakout. That's a structural re-rating, completely different risk profile. The hourly gives us the entry, long-term 492, mid-term 518, short-term 541, upper rail at 539, price at 581, 42 points above the upper rail on the shorter time frame. Less extreme than CAT, but still extended. Here's my play. Wait for a pullback toward the 540 zone. That's the confluence of the short-term trend and the broken upper rail. That's your entry zone. Stop below 500, respecting the midterm trend from the hourly. The target follows the sector momentum. When semis are up 101% in 6 months, you're trading the tailwind, not the stock. Two names, same catalyst. AI infrastructure spending. Completely different setups. CAT is the momentum trade with a legendary short seller standing in the way. Trade it with respect for both sides. AMD is the structural re-rating. Trade it with the sector wind at your back. Know which one you're playing. Subscribe if you want these stories. Watch list in the description. See you next time.